Hello, welcome to my channel. I'm Francesco from FreeFX. It's lovely to see you all, and today I'm going to talk about EURUSD and particularly volume and how we can use volume to help our trading. So for that, I've actually got two things on the go here. One is the spot FX chart from Oanda, and it's a EURUSD daily, and it's going from about December there to the current time. So I'm just going to kind of squeeze that in there like this. And the other one I was going to show you was the other version of which is this, and you can see that we have a Euro USD again from December to the present day, but this is actually futures. And the reason why I've chosen this particular kind of contrast is that whilst the price action is actually the same, as you can see, what we have that's different is that in the futures side, this is the March expiry contracts from CME, we have volume bars. Volume bars are centralized because the futures exchange is regulated and well documented, and the figures are reliable. So we have an idea and quite a certain volume as well. And this kind of gives us perhaps a better indication of what volume is doing. The futures FX market is smaller than the spot FX market. The spot FX market has everything in it, from people literally going on holiday to exchange their currency at the airport to central banks, everything. On the futures side, you've got obviously traders and etc., but you don't buy futures obviously when you go to the airport, also a tourist information money exchange desk to exchange your currencies. So it is a more centralized market, the futures market, and for that reason I use it personally sometimes when spot FX is in a pickle, it's not moving, it's stuck. I want to go over to the futures to see whether there's something brewing in terms of volume, if the volume is building up but price isn't. Conversely, if we have volume building up as well as price moving fast, that's confirmation of a move. And there are lots of examples of that. So without further ado, let me go on to the next part of this volume talk about currencies. What we're going to look at is an indicator called Chaikin Money Flow, invented by Chaikin, and there are various Chaikin indicators, and this is one of them. And it's calculated with the open, the close, the high, the low, and it also has volume figures in it. And that means that we are actually calculating how price behaved compared to the previous day's price. Let's say we look at the high, the low, the open, the close, etc. And also we look at volume. Now, because in spot FX we don't have volume, if you look at this chart, there isn't really any volume that we can use. You can go to Oanda and they have their own volume figures for their brokerage. So clients of Oanda will generate volume, and that's the retail volume for that will be available. FXCM will have its own volume figures, and they'll be different, and they may overlap sometimes, but they're different because their brokerage is different, the size of their clientele and distribution is different, etc., etc., etc. So think of all the different brokers that there are, and each will have its own tick data, volume data, etc. Different for futures, it's CME is basically one hub, and we look at CME futures figures for volume as a reliable source of that. So Chaikin Money Flow then, without the volume, looks like this. So you can see from December, price was going up. So as we know, just explain, Chaikin Money Flow, when you're above the zero line, usually it's a sign of a market going up, or an instrument in this case, and that means there is strength. So obviously we want to see the price and the money flow above zero also move in the same direction. So if we have, for example, in this case, you can see that the spot FX price is coming down, and also the Chaikin Money Flow is kind of gradually coming down and sort of agreeing with it. Here we've got a lower high from the 25th of January and the 12th of February, a lower high there. But the Chaikin Money Flow is actually generating a high low and a high high. So there is positive divergence, which is telling us that there's perhaps something going on, and we could be looking at price starting to move up. Okay, this is without volume figures. So let's go over to this side and check the futures, and you can see that it looks quite different. From December, here we had the December was actually moving down, or rather sort of from the 18th of December, let's say, moving gradually down. So if we go here to the 18th of December, instead of that sort of gradual descent, what we see is price actually staying just under the zero mark on the Chaikin Money Flow Index, not really moving. So the price is coming down. You know, it's pretty much equivalent to the spot FX price, and so that doesn't change between the two charts. But what changes is that we now have volume, and you can see the volume figures here. And so volume wasn't particularly strong either on the buy side or the sell side in relation to, or rather price in relation to volume, gave us a relationship line on the Chaikin Money Flow that was essentially flat. And then we started picking up here, and it's agreeing with price. There's no divergence as such. Okay, so that's kind of where we're at. So here's the difference. We have positive divergence on the spot side, Chaikin Money Flow, but it doesn't have volume. So how reliable is that to say we've got to buy euro? Now, I did talk about euro bulls being in charge, and I've done a video on that. So I will put that at the end of this as a card, and you can link straight into that video and see why I was thinking that there might be bulls in charge for euro. So just to finalize, use volume in the correct way. Look at the futures side to confirm. Don't use volume indicators on spot FX because they will give you potentially misleading signals. So thanks very much for watching. I hope this was useful, and I will see you in my next video. Thanks very much. Take care. Bye.